comes to an end, we decided to take stock of the big factors that moved the markets in this calendar year. And the first and the most important one was Trump tariffs. Remember, US President Donald Trump imposed tariffs at the rate of 50% on India. This was in the month of August. Negotiations are underway to reduce this tariff rate lower from 50%, but there has been no outcome so far. This impacted several sectors, including textile, gems and jewellery, pharma and seafood. These were the four sectors which were most impacted on account of the tariffs that were imposed by US administration. The negotiations, as I mentioned, are currently underway. We are expecting an outcome anytime soon, but so far this continues to remain a headwind for Indian equity markets. Perhaps we will see some outcome in 2026. Let's also talk about the big consumption boost by the Indian government, where in budget last year, the government went ahead and provided relief on income up to 12 lakh rupees. So that was one big trigger. And GST rate rationalisation, which came in the month of September, which came into effect on the 22nd of September. These were the two big triggers that helped aid consumption and will perhaps likely aid consumption in 2026 as well. Meanwhile, geopolitical uncertainty, this continues to remain of play and a factor to watch out for in 2026 as well. Conflicts in West Asia continue. There is no end in sight, although US President Donald Trump had claimed that most of these tensions will ease. That has likely not happened. FII exodus, another factor to watch out for. Remember, foreign institutional investors sold shares worth nearly 3 lakh crore from Indian equity markets in calendar year 2025. Fed action, expensive valuations and risk aversion. These are the three factors which led to FII exodus from Indian equity markets. So yes, several factors which continue to remain at play going forward as well. Another factor, monetary easing. Remember, Federal Reserve cut rates by 75 basis points in calendar year 2025, and RBI also cut rates by a whopping 125 basis points over the last 1 year. So that's the kind of monetary easing that we have seen not only in the global market but for Indian economy as well. But remember, primary market action continues. Primary markets raised nearly 1.7 lakh crore rupees in this calendar year, and the pipeline for 2026 also continues to remain very solid. We have a whole host of IPOs lined up, including Reliance Jio. That will be one big IPO that the market will be watching out for. But as we step into 2026, let's talk about the important factors that you need to keep on your radar. First, of course, is geopolitical developments and the kind of developments that we see over the next few months. Fed action, monetary easing is likely to continue going forward. Earnings recovery, FII flows and consumption demand, and how that is likely to pan out going forward. So yes, several factors which were at play at 2025, and these are the 5 things that you need to watch out for as we head into 2026.
All right, thank you so much, Ashesha, for getting us all those details. But time now to wrap this edition of Market Parafat. It's a goodbye from me and Kanishka and the entire team who put this show together. Thank you so much for tuning in.